Apple saying yesterday that some apps will be allowed to provide a link to their websites to prompt users to sign up for a subscription. The company previously forbid app makers from directing users to subscribe through a website because it circumvented Apple's cut of 15 to 30% of an app's gross sales. The new rule will not apply to all transactions. Game apps will still need to use Apple's payment system, but media apps that link to content subscriptions can now offer a service without a subscription handled by Apple. That means apps like Netflix and Spotify and Amazon Kindle can likely avoid paying Apple's cut. Apple said the decision was made as part of a settlement with the Japan Fair Trade Commission, but it would apply the new rule globally starting early next year. Meantime, Apple shares hit a new high yesterday. Well, we're learning. Joining us now, Gene Munster, managing partner at Loop Ventures. And I say we're learning because one of the topics I suggested for you is that it was a fresh all-time high. And do you know the difference between, are there all-time highs that aren't fresh? New ones, Gene, do you know?
No, I think all-time highs are, I think they're all, once an all-time high. Are some less
fresh than others? Are some kind of smelly and rotten and old, do you know, or are they all fresh? I don't know.
I think most of it's fresh.
Yeah, they're mostly fresh. Okay, they're mostly fresh. If you didn't buy Apple on a high, on a fresh new high, you probably don't own it in the last 3 or 4 years, since it keeps stocks that hit new highs seem to hit a lot more new highs. Is that still the case? And I mean, there are a few pullbacks, but is that still the case? Still buy this thing here? Gene?
I think so, Joe, and I think ultimately the question, we can talk about some of the recent announcements around their anti-steering and the impact to the App Store. This is not a perfect story by any means, but I think it is a great investment, even at its highs. And I think more near term over the next year, I could see this being a $200 stock. It's not a stretch to get there. It's based on 7 times earnings and a 28 multiple, and I think that those are achievable, if not exceedable. And so I think that as investors contemplate an Apple position, I think that's probably a good roadmap over the next year. And then you have other segments, whether it's what's going to happen in augmented reality, that is going to be I think, the future of how people interact and what they're going to do around auto and maybe even something around healthcare and wellness. And so when you put all those together, I think that there is upside to shares here. And it's hard to buy a company that has had the performance if you've missed out. I can understand psychologically that's hard, but I would anchor any investment decision in thinking about where our lives are going and how much time we're going to spend with their products. And I think if you take that view, that there's a strong case to continue to add to a position of Apple here.
The health stuff you're talking about, I mean, I guess we're going to have a blood pressure monitor eventually, a wrist thermometer eventually on these devices. Maybe I'll get one if you can do all that. I don't, I can monitor my blood pressure depending on, who my co-anchors are.
Correct. And so this is something, if you think about the front edge of Apple and wellness, it's a difficult road just because of all the complications related to interacting with the healthcare system. So they've taken the approach as the watch as their landing point. And as you mentioned, blood pressure, they could do some glucose monitoring. I think that most people would not want their blood pressure to know what their blood pressure is on a minute-by-minute basis. I suspect that they will be able to do it so you can maybe get it on a week-to-week basis so you're not always monitoring. For those geeks in your audience, Joe, I would say if you wonder how is a watch going to be able to measure your blood pressure, because we're so used to these blood pressure kind of having this air pumped around your arm, for example. It's not going to create a tightness around your wrist. What it does is it measures your heartbeat. And based on a heart rate and some of the AI around that, they can interpret what your blood pressure is. Which brings me to my final point around the watch and health and wellness, is that the majority of the features in Apple Watch are considered, as one clinician explained to me, for entertainment purposes today. There is an AFib thing that does have Class 2 designation. But I think one tell for investors to see how serious Apple is in health and wellness in the watch is to see which other features, whether it's blood pressure, glucose monitoring, get that important higher class designation from the FDA.
I'm wondering, how accurate that is using a heartbeat with algorithms, and it sounds fancy, but I wonder about it. If it did work, I would like to know all the time, because can't you do, there is some evidence you can do biorhythm. I mean, if you have feedback, there's maybe ways you can actually control it. Yeah, I don't know, maybe that's a myth. Let me ask you about the 13. Are we set up for, is there any way there's disappointment about that cycle? Because we're expecting a lot.
Well, I think that the good news to answer is that I think the disappointing factor could be around supply. Usually there's a few weeks where it takes supply to work itself out. I suspect that it could be a few months this time. We're still seeing delays with iPads and Macs related to everything that we've been talking about on the component side. That's probably where the near-term disappointment is. From a feature and functionality standpoint, there is kind of a unique setup here in that expectations are low, that the belief is that we're going to get slightly better battery life, better camera, pretty subtle changes after last year adding 5G. And why that's important is that expectations, I think, are for this to be a rocket ship, I think are somewhat muted. But keep in mind, if you're curious, how can an new iPhone release without any whiz-bang new features be a success in investors' eyes, is the base of iPhone owners that are 3 years old or older. We estimate to be about 400 million. The street's looking for 260 million units over the next year. And so this massive base of basically people who've been holding on to their phones for a long time, for them it's not about what the upgrade is this year. It's about the phone's improvement over the last 3 years. And I think it will satisfy them and ultimately be a success.